Welcome to this explainer, where we're going to break down exactly how you can filter and analyze a potential Kansas City rental property in literally 1 minute. Okay, let's just dive right into this. If you're a real estate investor looking at the Kansas City market right now, you already know the deal. Inventory moves incredibly fast. You definitely don't have hours to pore over spreadsheets for every single listing that pops up. You need a reliable, data-driven way to cut through all that noise and spot the real opportunities. And honestly, that's exactly what we're going to build for you today.
But hey, before we jump into the raw numbers, please note that this explainer is strictly educational. It is absolutely not legal or tax advice. The framework and data we're looking at today come directly from Alpine Property Management, Kansas City. They've been guiding and serving investors in this specific market since 2013, and they manage over 250 homes. So we're tapping into over a decade of practical, boots-on-the-ground experience to show you what actually works in this unique market. Because your time is super valuable, we're going to move quickly through 5 key areas. We'll cover the 60-second filter, the rent-to-price ratio, true cash flow, neighborhood strategy fit, and finally, making confident offers. All right, let's get right to it.
Section 1, the 60-second filter. Let's dive right in and address the elephant in the room. I know what you're thinking. Can you really do this in just 1 minute? Honestly, it sounds impossible. But experienced investors know that the 60-second analysis is simply a fast filter, not your final decision. Think about the sheer volume of properties out there. Successful investors look at dozens of listings for every single property they actually close on. They definitely don't run a full underwriting model on each one. Instead, they use a quick initial pass to decide whether a property is worth a closer look or just a hard pass. So, to avoid analysis paralysis when sorting through Kansas City's relatively affordable inventory, you just need to follow 3 rapid-fire steps to see if a deal is worth your valuable time. First, check the rent-to-price ratio. Second, estimate the true cash flow. And third, confirm the neighborhood strategy fit. Think of these 3 steps as your early warning system for a bad deal and your green light for a good one.
Moving on to Section 2, the rent-to-price ratio. Let's see how this metric builds the absolute foundation of our 60-second framework. Step 1 is the rent-to-price ratio. This is your fastest indicator of potential success. It's simply the monthly rent of a property divided by its purchase price, which acts as a really quick initial cash flow screen. For example, if you have a property renting for $1,300 a month at a $16,000 asking price, you literally just divide $1,300 by $160,000 to find your ratio. Now, the specific target number you're looking for here is 0.8%. As a quick screen for a market like Kansas City, hitting 0.8% or higher instantly signals that the property has real cash flow potential. If you do that quick math and the number starts with a 0.8 or higher, you know right away that you should keep looking at this listing. It's an incredibly powerful way to immediately weed out properties that will literally never pencil out.
Again, this is a quick filter, not a final verdict. But it tells you exactly what kind of financial game the property is playing. That 0.8% indicates solid cash flow potential. You'll often hear this concept referred to as the 1% guideline in real estate circles. And here's a really interesting point. In Kansas City's specific cash flow neighborhoods, approaching that full 1% is actually highly realistic. On the flip side, if you calculate a ratio well below 0.8%, you're usually looking at an appreciation play. That just means you're paying a premium for property value growth rather than monthly income.
All right, Section 3, true cash flow. Once a property passes that initial ratio test, we move to the second step of our framework, calculating the real cash flow. You know, the absolute biggest mistake novice investors make is only subtracting the mortgage from the gross rent to figure out their profit. But what that misses is a massive chunk of reality. Operating expenses and vacancy will eat up 35 to 45% of your gross rent right off the top. Seriously, if you ignore that 35 to 45% block, your 60-second analysis will be completely broken, and you'll end up buying a property that drains your wallet instead of filling it. To get an accurate picture in 60 seconds, you absolutely must factor in realistic allowances for expenses. We're talking taxes, insurance, maintenance, capital reserves, vacancy, and property management. All of these sit squarely on top of the mortgage. And the most crucial point here is that you must use realistic market rent instead of just relying on the seller's asking rent. Asking rent is basically just a marketing tool. Market rent is the reality of what a tenant will actually pay. Section 4, Neighborhood Strategy Fit. This brings us to our third critical filter, making sure the property actually matches your specific investment strategy. This is where understanding the local landscape is absolutely essential.
The Kansas City Metro is totally unique because it literally spans across 2 states. So, a deal that works perfectly for cash flow in Missouri areas like Independence, Raytown, or Grandview might be completely wrong if your goal is long term appreciation. For appreciation, you typically look across the state line to Kansas areas like Leawood or Overland Park. You simply can't force a cash flow strategy onto an appreciation neighborhood, and vice versa. Knowing exactly where the property sits informs everything about your expectations.
Section 5. Making confident offers. Finally, once a property makes it through your quick 60-second filter, it's time to turn that quick pass into a rock-solid projection. Listen, you should never make an offer based on a 60-second screen alone. That fast filter just tells you if you should spend another 10 minutes looking at the property in depth. To bridge the gap between a quick screen and a confident offer, you need a full underwriting model. This is exactly why Alpine provides a free online cost calculator to run the exact math for any Kansas City property in under a minute. You just plug in the price, the realistic rent, and some basic details, and it returns your real cash flow after every single expense we just talked about. It's a total game changer. I want to leave you with this final thought as we wrap up this explainer. Avoid the optimistic version where nothing ever breaks and the unit is never empty. Always run the real numbers. Knowing how to filter fast and underwrite accurately is exactly how you win in this market. Are you ready to find out what your next prospective property will actually cost you? For help managing your Kansas City rental property, call Alpine at 816-343-4520 or visit alpinekansascity.com.